TGIF Warriors, hope everyone had a decent week. I do have some news to report. It's actually some pretty, devastating news. President Trump has fired me from being the host of FACE. He said, but don't worry, because Larry Kudlow should be here to host this webinar within a month or so. So, had to report that to you guys. I heard that he offered Anthony Scaramucci, the Mooch, to do it, but the guys weren't interested in having Scaramucci host FACE. So I've enjoyed working with everyone.
Dale, we only want the best, so we want you.
I have to follow the Commander-in-Chief's style. Anyway, okay, so couple of takeaways for me this week that I'll share. I was an amateur this week in my bearish ETFs. I hate being an amateur. Okay, anyway, yeah, I was buying bearish ETFs before the NFP, and then it was up here and confirming highs, and I just got out of the way Monday. Took my wife to the doctor. I said, I don't know. Yeah, I could fail from there. Anyway, I'm flat, and I have a hard time catching moves like this when they just kind of roll over. So here we go, it's just rolling over. But look at the way the 50-day is containing. I'm just being distracted a little bit by the Skype. If we get back through this, and I don't think this is going to be the final high, and we're going to have a crash, but I'm going to ask Steve, was this impulsive? Was this impulsive? I don't know. When I look at the 4-hour, this doesn't look impulsive to me yet. I was thinking maybe ABC, but it could extend to the downside. I don't know, maybe 2,700. I still think these highs will give way into late this month. I'd rather have it, just take care of business, but a very negative week. So we should have some follow through. Pretty negative week here on the S&Ps. So picture unclear to me there. I don't know what to do right now. If I didn't short it here, I don't know. I don't feel like shorting it here, so I'll let it go. But here's really the major takeaway for me this week. And basically, it's not something that I traded. If you recall, I thought this might be a bear flag off the Draghi, the ECB press conference last week. My caveat was closing over 24 would change the picture. But this is the key takeaway to me, because I had this trend line drawn before we got here yesterday. I believe it was yesterday. And it was rejected again from this trend line. So I could say something now that to me, it's pretty certain. It's going to be a very high probability trade. If we start closing back over 24, I think we're at 26 in a heartbeat. Give me a Y if you're with my analysis. And maybe part of the correction or further downside in the market's going to be one more trip down to 21.5. It's sitting right here on the 50-day moving average. So I don't know. Is it going to try and break out first or work lower first? I'm not always Mr. Pinkert, but I do know this. This is a major takeaway for me this week. Since we were rejected from this trend line, and now you have 3 hits. And you guys know I'm not a big trend line guy. I'm more of an RSI divergence or confirmed high guy. But when you have 3 touches like that, the more touches, the more reliable it is. So I trust this formation here. And that's the key takeaway. I don't know if we're going to go down here one more time. Dixie did rally yesterday after I talked about it. We had a pretty good push. But I have major confluence in the Dixie. I don't know if we're just going to roll over here or go for this first, and this would give you the 121 euro. But I have, you know, potential 3 drive and a downtrend, confluence at 91.31. So again, I don't know what to do. Are we going to go here first? Are we going to break? And then down here we'll have a 3 drive. And the last thing is, what a great short the end was this week, right? And there was a little 3 drive at the highs of the 4 hour right here. I was working with someone Saturday, and I said, you know, we were, I believe here, I said, this would be a nice little 3 drive up here. Guy took it. But now, we're not that far away from a daily 3 drive, are we? That could happen next week. So, down around 105, if this stays above 30, it's currently 33, you could have a 3 drive to a bottom formation in the end. So those are 2 things I'm looking at, the downtrend line in the euro and the end down around this region to see if we get our second divergence. So I don't have anything actionable today, but I also teach that the weekends are the best time for you to plan your week ahead. You know, that's why Blake does a week ahead video. He's already planning. He has his trades in his head already going into the following week. I think Steve does too. You know, most real seasoned traders are always looking ahead and looking at the markets and saying, well, if it did this, that would be an interesting entry. Or if it did that, maybe it means this, and I would do that. So, you know, you go over these different scenarios that you see technically over the weekend, and the big advantage is, because I've done both, it's much better than analyzing on the fly and making a decision to have it predetermined and then see if it sets up, than trusting yourself you're going to see it when it gets there. Can I get an amen on that? Okay. So what are you guys going to do this weekend? Going to get ready? You know, and another way to, and you also know I'm a big believer in intelligence gathering. So another way to do it is to sign up to ForexAnalytix, at least a trial for $1. And while you're going over your stuff, you take a look at, you know, all the different takes on different currencies from, you know, some very talented trading minds. You know, you're going to get the macro from Stelios, and, you know, Greg hasn't been here for a while. Let's see what Greg is saying here. Yeah, Greg is still looking for higher. Okay. I don't think this is an updated chart. Invalidated 121.53. Okay, so, you know, that gives me something to think about. You check out Andre. I want to interview Andre. Andre's doing some excellent harmonic work now, and he has a I don't know if it's a Gartley. You could learn about these formations, but interesting. That's going to be around. Well, that's going to come in before the trend line. So, also next week, keep in mind, and Gann was big on this. We have spring. Spring will sprung next week. I think it's Tuesday the 20th. And Gann taught that as seasons change at times, many times, and I've seen it, within a few days, market directions could change too. So, you know, if the euro's heading into this range on Tuesday, since, you know, I still think the dollar has one more decline ahead of it, that would be an interesting area. It's 78.6 back around 22. So this is something I didn't see. I would have seen it over the weekend because, you know, I'm a subscriber. All right. And I have access to this. So real great things, different looks, especially if you don't have a lot of people to call and talk to. And, you know, you could do this at 3 in the morning when, you know, the kids are asleep, Steve, and, you know, You have some peas, and right before Steve's alarm clock goes off, mommy, daddy, mommy, daddy, mommy, daddy, before that alarm clock goes off. And I think that's about it. So I would subscribe and include this in your intelligence gathering. All the different looks and disciplines from the whole team. Okay? And that's it. I know Blake is on his way to the Magic Kingdom. Probably he'll be scalping off his phone on, I'm trying to think of some of the Matterhorn. I could see Blake and his family going down the Matterhorn in about 5 hours with water splashing on his iPhone and him trying to get a few scalps off. Anyway, Steve, Stell, how are you? How are you guys doing today? Hey, how are
you? I'm gonna say a few things first, and then Steve is gonna take over.
You want to take the screen, Stell?
I will. Good morning, by the way. Good morning, everybody.
Good morning.
And let me take the screen.
Mommy, daddy. I tell my wife that story, Steve. She cracks up.
I still remember going to the Magic Kingdom when I was 12. This was many, many years ago. It was magical.
Yeah.
Anyway.
It's a fun place, even if you're an adult.
Yeah. So
we're not. All right, what do you got here?
I hope you don't believe the excuse that Blake actually went to the Disneyland because his kids asked for it, right?
You know what?
He's the one that wanted to go. The kids reluctantly followed.
Yeah, I didn't think about it that way. You're probably right. You know that guy. All right, so
right.
All right, so you have your dollar. Are we gonna have one more little low before we get to 92? Is that the
well? The low might be, and I drew this a couple of months ago. This is the chart I always open up with. I've said this many times, and this is a monthly chart, so it's not a short-term chart. I thought we might go a little bit lower, but I think the low is in. Now we have the FOMC next week. Obviously, that's a big day. The market's pricing a near 100% chance. I think it's something like 95% chance of a hike. I think we can all agree it's going to be done because the Fed, the last thing they want to do is surprise the markets. And so they're going to hike next week. The question is, what do they do afterwards? And if you look at the Fed Fund futures, if you look at the spread between April and January, which shows you roughly what is priced in for the rest of the year, it's under 50 basis points. So it's about 48, depending on where they're trading, 48 basis points for the rest of the year after March. Now, I personally think the risk is for the Fed, okay, they're going to hike, and they might indicate that 2 more hikes is the base case scenario. So do I think that's right or wrong? That's slightly irrelevant, but I think that's the base case scenario. So I have a feeling that the market will go pricing in, okay, 2 more hikes fully, and then a little bit more, maybe a half or 2/3 of a 4th hike. So when that happens, or if that happens, I think the dollar is going to find some strength. Obviously, it's still, the positioning is still, I think, a little bit bearish in the dollar. So there will be some stops. I think this move will be a little bit exaggerated. I think we'll get to something like 92, 93, this zone again in the DXY quite easily. Others are talking about 94, 95. I'm not that sure, but I think 92 and a half, I think, if I remember, is a big level. I think we're going to get there. And then we're going to then start seeing what actual effects all these rate hikes are having. You know, so slowly they're coming into the economy. If you see the GDP, it's always, it keeps getting revised lower and lower. I think we started with something like 4%, and now the last revision is 1.9 for the previous quarter. So it's
from the Atlanta Fed.
From the Atlanta Fed, yes. So, you know, all these hikes that they've done like 5 already, right, in this cycle. Slowly they're feeding into the economy. The economy was doing okay. Employment is very good. Inflation is still on the low side, and they're hiking into it. So the market, I think, will go to price at least 3 this year, maybe 4. And then as all these feed through, I think we're going to realize that the hiking cycle will be over earlier than we think. So that's why I think then the dollar is going to start going lower and is going to go substantially lower from here. Again, this is my view. You know, nobody knows 100% what's going to happen apart from Steve. So, so that's my base case for the dollar. My base case for the dollar, and then obviously the various pairs are going to be dollar pairs are going to be affected by that. Now, the other interesting thing that happened today was we had the Euro CPI print, which came in lower than expected, came in at 1.1 year on year versus 1.2. Now, that's clearly not good. You know, it's declining. You know, we should be going towards the target, which is 2%, before the ECB can feel really confident about tightening. They're still going to probably start tightening, you know, remove accommodation in terms of QE and all that, but to actually go in and start hiking properly, they need inflation to be close to target. That's my view. They can't really do a lot unless that happens. So, you know, you ask me what am I doing with the euro dollar? I don't know. I have no idea where it's going, because I think both the dollar and the euro are probably going to suffer a little bit. Now, short term, I think the dollar is going to bounce. That's why if you put a gun to my head now, I would probably sell the euro dollar here. But that's going into next week's meeting and the aftermath of that, not for a long-term trade. So that's my view on the dollar and on the euro a little bit. Another chart I wanted to show, I don't usually talk about this, but I want to show this, is Bitcoin. It has actually been trading quite technically in the last few days and weeks, and people who follow me on Twitter or who are on the chat room will have seen this chart. I keep updating this, and it's been since the highs of December. It's been in a descending channel, and when it was breaking out here, what was it, a couple of weeks ago, I said, if this is a false breakout, then this is going to be quite bearish. And if you see, it went right back into the channel, tested it a couple of times, keeps going, it broke the fib. I think it's looking pretty weak at the moment, and I wouldn't be surprised if we see 6,000 again, which is the low of February, unless obviously something huge changes, you know, something in terms of its adoption or development, or, you know, Bitcoin. There's a million things that affect Bitcoin, but price-wise, yeah,
6,000, roughly 6,000 above its intrinsic value. Eh?
yeah. I mean, it's a long conversation. This is, but yeah, it's very difficult to put a value onto this instrument. Very difficult. But anyway, I was just looking at this chart, and it actually looks quite good. And you know, if I put a gun to my head, I will still sell it here. You know, even though it's not done well in the last couple of weeks, I still think it's going lower.
You know,
so that's something.
At 2,000, I have a monthly, I think 200 month or 200 week at 2,000, and that's where the bottom of your channel was. I know it sounds crazy to talk about it, but you know, if we take out that 6,000, it actually kind of measures that as well. So I love that channel. Nice work, man.
Well, I just, you know, I drew it and then it kind of followed. So I thought, wow, you know, for an instrument like Bitcoin to be trading, to be following, you know, a kind of a technical path, it's rare, because this thing is like a wild animal. It does whatever it wants. And the other thing I want to talk about is another one where I want to have a pip on, and one I personally have as well, which is the Sterling Kiwi, also known as the Kraken. And this also had been lingering a lot in this zone here for a while. This is a weekly chart, and these arrows I drew months ago, so it's come out really well. I know it doesn't usually happen like this, but now it seems to be taking off, and I think there's a level around 95, 94.5, 95, where there's previous highs, where it's gonna make a decision there. I'm still long, and I still really like this one.
You have a pattern in play on this, don't you, Stel?
I do, yes. I do, yes.
Where was the entry on it?
The entry was around 189.6, if I recall. Hold on, we can find out very quickly. 189.6, yes.
What a great shill I am. All right.
That's you're very good. So that's one of my favorite trades, and I like that. And the other one we talked about which is Euro-NOK, which is one we talked about yesterday. These lows were broken after the Norges Bank was hawkish yesterday. I still think we're gonna go somewhere around this area where in the 920s, 930s. But the main thing is that inflation in Norway beat quite substantially last time. If this continues, if inflation doesn't fall back again below 2%, it's at 2.2 now. If it beats or if it stays around these levels, Norges Bank now have no reason why they shouldn't hike earlier than autumn. They indicated autumn. I think it's coming faster, unless inflation, as I said, turns lower, where okay, they're going to have to think about it a little bit. But we get another print or two of high inflation above 2%. I think they're going to hike before the summer.
Yeah, but you know them. They don't want to be the first movers in the European Union. I mean,
yeah, you're right. They don't want to be the first movers, but they have rates at 0.5%, which is historical lows for them. And
no, I totally agree with you. I totally agree with you. But they will avoid as much as possible hiking before the ECB, but they will have to.
Yeah, and the other thing is that their currency, they don't have to worry about their currency strengthening because it's almost near all-time lows in terms of the euro, so all-time highs in terms of euro-NOK. I think all-time highs was 10. Or 10.
That is
yeah.
very true.
So it can go to 9, and it's still not a big move, in the grand scheme of things. If you go to a monthly chart, if you look at the okay, this was a blow off top here, but it was still again around 10. But if you look at the the long-term average, this is still very close to all-time highs. So I don't think they will have any problem with their currency in terms of worrying about it appreciate. But obviously, I don't know them. I'm just thinking what I would think. So
we know them from their actions, and they have definitely postponed hiking for as much as it would be possible. There's no question about it. Now the fun question is. The fun question is what's going to happen with the ECB. Imagine if we go in a recession like, by 2019, and they never managed to even start hiking. So imagine what's going to happen.
Yeah,
the Germans are not going to be happy for sure.
Yes, that's one thing where Europe is on the back foot compared to the US. The US have already hiked. They've got some ammunition, just like Dale's been saying for a long time now. One of the reasons why they're hiking is that. So yes, I agree, Steve, and I really don't know what they're going to do. Do they go negative rates? I don't know. Let's not think about that scenario.
Yes, they are already negative rates, but the question is.
Great commentary, Stel. You got to do this every day. Very good.
I'll try. It's just that the way I look at things don't change from one day to the next, unless something happens. So I'm not like the other guys, but yeah.
When Stelios talks, people listen. Now here comes Steve. Steve, 131 and a half Canada coming up, baby.
Oh yeah, it was more or less, it was more or less obvious because usually when you have confluences, they act like magnets. We've seen that many times in the market, right?
Wouldn't it be nice if it posted that high, like on the Fed hike? Now that I know, when is the Fed meeting? Tuesday, Wednesday, Wednesday. Meeting?
It's 20th, 21st. So which day is that?
So they make the decision the 21st.
Yes.
Okay, that's a day after spring.
It's Tuesday, Wednesday. Tuesday, Wednesday.
Well, they'll make the announcement Wednesday, Tuesday.
Yeah. Yeah, that was a leaky. Okay, so we have quite a few things to show today because we've had we've had a market that has been decently active in several pairs. I know that some of the popular currencies like the Euro USD and the cable haven't been doing much, although I have to say that the cable is holding quite nicely, and this looks like a little bull flag to me. So I remain quite constructive even for the euro because it's holding the channel that you showed, Dale, but there is no question here. I mean, this is definitely not a bearish move, the one we've seen. It's another mostly horizontal consolidation, likely a bull flag. But we've had other things that have definitely been moving, and it's a good opportunity to have a look at them. We also have a few questions here that I'm going to address as well. Questions about the loonie, about the NOK. Anyhow, let's begin by them now that I mentioned them, but there are other currency pairs I wanted to talk mostly about. So you already mentioned, Dale, that USD CAD is on its way there, and it is on its way there. Keep in mind that this little area is a confluence of multiple resistances, and not all of them are drawn here. I can show you now. So, for example, it's the 61.8 of the move lower. It's the equality target of this first leg higher with, the second leg higher. If I remember well, it's also a nice, fib extension. Let me see. It's also a nice fib extension from this last deep lower that we had. I think it's the 161.8. Let me see. And let me remove everything else so it doesn't pollute the chart. Yeah, it's also the 161.8 from this little corrective move lower. So as you see, it's at least a triple confluence of resistances up here, anywhere between 131.10 and 131.30. So this range of 20 pips has at least 3 areas of resistance. Needless to say that we're also getting close to the ascending channel as well. So bottom line, I believe that this zone is definitely powerful. Does that mean that we're going to find the top there and then lower? Not necessarily, but it does mean that there is a high chance that the market is going to react to that level. The reaction, of course, might be temporary. So we might just see something like a little dip lower from there to come and retest this breakout level and then resume to the upside for the next area of resistance, which is close to 133. Or we might turn from there. Obviously, always looking for turns in a move that has been ongoing like for more than a month now. It's not an easy task. So you should always be very cautious in trading reversals. For example, scaling in, scaling out, know exactly where your risk is and where your reward is, because you need to have in place the risk reward parameters. And there is something that is completely misunderstood, and I see a lot of traders do that mistake. And I will briefly address that before we go over to other currency pairs. I see a lot of traders that understand the importance of stop losses. So, for example, I know a lot of people that would say, okay, I'm going to enter like some of it here. I'm going to enter, let's say, some of it here. So my cost average is going to be like somewhere there, and I'm going to keep, let's say, a stop loss there. So this is a good, this is a good plan. This is a good plan, but this plan only involves what your risk is. The adage that you can't go broke by taking profits, in one sense is correct, because obviously booking profits is not something that diminishes your trading account. But on the other hand, it's a huge trap because, yeah, you might be booking profits, but if the profits you're booking at the end make your average reward to risk ratio being less than 1 to 1, you will eventually probably be losing money. And I say that because I see a lot of people that might have a plan without a specific profit target in mind. And whenever that plan doesn't work, they're going to hit their stop loss. And whenever the plan seems to be working, they're going to take early profits. So if you take early profits and you keep taking early profits, but you keep you keep getting stopped out wherever your initial plan was, perhaps the reward to risk ratio you had in mind is not the one you actually use in practice. So that's something that people need to really be careful with, because I've seen that happen a lot of times. So anyhow, my trading plan remains the same. I want to be short half of a position here and then another half up there at that resistance. I think it's worth it, and I'm going to stick to it.
Sorry to
Yes,
interrupt.
Elio?
We just had some data. Building permits and housing starts both lower than expected in the US, and Canada manufacturing sales also missed. So not very good data all around. Not the most important items, but still they're good. They're not.
That's true. USD CAD is not doing much. Euro and cable are not responding, and I don't want to show the USD yen, etc., because we're going to speak about them very extensively. Because the yen and the yen pairs are obviously the ones in the spotlight today, right? Now, briefly talking about the NOK, since you mentioned it, you already showed the Euro NOK. I don't have much else to say about that. I showed it yesterday as well. USD NOK definitely remains one of the weaker, USD crosses, and we've broken below this triangle. What I don't like is that we don't seem to be having any strong follow through. But regardless, what remains as a fact is that no matter how you look at this chart, it looks bearish, and I think it looks good for a continuation lower. Anyhow, if the USD is to be weak, NOK is obviously one of the best candidates here. Now, let's go to talk a little bit about the USD yen and mostly some commodity currencies and their crosses with the yen, because these have been big movers overnight, and I think they're technically very clear and clean. So USD yen made an attempt of rebounding, but you can understand how weak this attempt is, since it never even managed to produce like one more thrust higher to at least surpass this highs here and come retest this broken trend line. So Dale already mentioned the possibility that we've been seeing some divergence, and perhaps if we push to new lows, perhaps we're going to have a 3 drive, perhaps. But to be honest, this push to new lows seems more or less inevitable at the moment, because the USD yen has been extremely heavy. The rebound has been extremely weak. It resembles very much the situation we've seen with treasuries, a very weak rebound, right? And of course, they're highly correlated. There's no question about it very often, but this is not my point here. So, with the USD yen being so weak and the yen in general being so strong, and seeing so nice moves that we've been seeing in the Aussie and the Kiwi, just look at the Aussie. The Aussie looks technically very nice because it came back to retest the 0.79 areas resistance. Not only that, it intraday broke above it and it was looking, quite bullish. But then it just reversed intraday a couple of days ago, and it left behind this long upper wick at a very nice confluence of resistances, because that was also the 50 DMA there. And yesterday we got that big move lower, and today we're seeing some nice follow through. So we are about to come down and retest the 77.40 area and the 61.8. There's no question that if we actually manage to break below there, that's quite a bearish development. Obviously, combine that to the fact that the yen has been very strong, and you can see here that both the Aussie yen and the Kiwi yen have acted in a very technical manner. They rebounded in an ABC move. You can see that ABC. They came back, they retested previous support as resistance, and now we're about to test the lows. Same situation here with the Kiwi yen. You can see it. It came back, it retested the 38.2. It never managed to close above it. And we're pushing to lows again. If I zoom out, you can see here that this area around 76 is quite a significant area of support. So in all honesty, if we break below there, there is a big pocket of thin air. I mean, I would definitely not want to be long this pair if we actually close below the 76 area. So this is something that you definitely should pay attention to. And speaking of that, obviously we know that among the commodity currencies, the Canadian has been the weak sister, and you can easily see that here. This move lower has been extremely impulsive. Even if you zoom out, you can see that when we broke below there, it was more or less obvious that this whole move higher had all the characteristics somebody would expect of a large correction, right? Slow overlapping and breaking below it definitely proved the case, because as you see, the pair has been plunging, without even a relief rally. I mean, we drew that when we had that hammer there, and I honestly expected that after such a strong move lower, it will at least make it back to the 80-60 area in order to go short there. And I was really optimistic that we might go back there, retest that area, and I wanted so much to be short there, but it was so weak that it didn't even actually make it to that area. We're now about to test, if I remember well, it's 11-month lows. We almost tested it at the low of the day today. And needless to say that if we break below there, the situation becomes even harder for the bulls. You can see that this was a confirmed low. RSI hit 20. The daily RSI went from 77 to 20 within couple of months. So you can understand that that's the day, and this is the daily chart, right? So you can understand how weak this is. And since this unquestionably is an impulsive move lower, at some point, obviously, this is going to produce a bigger corrective move, right? But given the fact that the prior move was impulsive to the downside, I will remain of the opinion that, any strong move higher, which at some point we're going to get something, is definitely to be sold. Okay, there's no question about it. It's definitely to be sold. This structure is 100% impulsive. You can easily distinguish potentially we might have already posted like 5 legs lower, in like 1, 2, 3, 4, 5. But I say potentially because perhaps we have an extended third wave. So in that case, we might have more downside after we get a fifth wave. We get like another correction, another push lower, and then a bigger correction. We're going to see how this unfolds. Actually, instead of drawing it, let's throw in a freebie here. Let's see what Gregor thinks about it. I respect Gregor's analysis immensely. He's a magnificent analyst, but I refrain from looking at his analysis too often because I don't want to taint, my point of view. Okay, so you see we're on the same page, and he exactly sees that. This chart is not very recently, as you see, updated. He sees this. He was already expecting the move lower. He was expecting it from a little bit higher, exactly as I did. But it's okay. I mean, the market is never perfect. So he sees that as a fifth wave down, and he sees that as a first leg lower. So he believes that we actually found it high, which I believe as well, because if you see, I zoomed out, and I told you that this whole structure higher was corrective. So yeah, I'm of the same opinion that we should get a rebound, and I'm looking to be short that rebound. No questions asked. No questions asked. Hey Dale, did you say something, mate?
No, buddy. Maybe it was my chair squeaking. My guest, our guest rescheduled, so I don't know how long you want to go, but you have as much time as you want.
Okay, mate. Depends on I'm going to keep on viewing the markets that we actually, because we haven't finished with markets of interest. Okay. And questions, of course, which gives us the comfort of going through all the questions, and whatever time it is, we call it a day.
Okay, bro.
So now that we had a brief look of some of the interesting movers of the night, actually we're not done, because we also have the pound crosses. Stelios already stole a little bit of the thunder with the pound Kiwi. We showed yesterday on the webinar that both the pound Aussie and the pound Kiwi, they were on the precipice of breaking higher. I'm really absolutely no surprise to see that happen. I actually managed to grab a little bit, unfortunately, just a little bit, at 1/3 of a position at 179.13, if I remember right, on the pound Aussie. But you know, this is not like much of an exposure, especially for this pair. So I really want to see how it will react from here. Listen, in all reality, I'm not one of the people that believe in triple tops. So meaning that I'm not implying that a triple top cannot happen in the market, but I'm implying that it's such a low probability that I would never make a trading plan based on the fact that a triple top might be, you know, in the cards, right? That's my point of view. So I'm seeing this as a consolidation formation that broke to the upside. We're currently testing what looked like it could be a double top. I really believe that this area is not going to hold, even if we see a pullback from here, which I'm actually hoping for, because I really want to increase my exposure in this market. So even if we see a pullback from here, I think it's a great opportunity to join the uptrend. And I know that Stelios showed a longer term chart on the pound Kiwi. I've been showing this for a long time, and I had been saying that, listen, you know, this pair is trapped below the breakout trend line that we had from this large bottoming formation and this descending trend line. And guess what? We actually broke this trend line first, which still isn't a surprise, as you understand. And it's now looking quite healthy. Momentum is picking up. We are about to post a higher high in the short-term view, and you know, everything looks good. So it looks good for a move higher. So I think, you know, these are two crosses to really pay attention to as well. The pound Aussie and the pound Kiwi, they've been boring for quite some time, but you know, that's why one of the main you know, attributes a trader must have is patience, right? So let me go through a few of the questions we have here. Good morning to you as well, Kurt. USD CAD, we already had a look at it. Okay, hi Steve. So you have opposite idea than Stelios, as he's looking for a big move to 92 in DXY, and that is like saying Euro USD will go lower. Thanks. So the sell area should be here in the Euro USD. Okay, no, we don't have opposite ideas with Stelios. First of all, I have no strong opinion of the DXY, and the reason is very obvious. How can I have a strong opinion of the DXY? Look where it is at the moment. At the moment, somebody can claim that the DXY is likely triangulating within an expanding triangle, more or less in the middle of it, right? So, I mean, what can I say here? Two things I can say. One,
I'm strongly neutral right at this point.
yeah. One, the bigger you know, the bigger trend since last year has been lower. There's no question about it. So we have to respect that, especially as long as 91 holds. If you remember, I was the one speaking about the importance of 91 before we got rejected once again from 91. So with 91 holding, I can't be bullish here. I have to be neutral, right? Now, do I see the potential of a bigger bounce towards 92.50, where we have like a confluence of many resistances? Yeah, sure. Sure, it can happen. Absolutely. It can. Does that mean that the Euro USD will have turned bearish? No, it won't. It won't, because the DXY can easily push to 92.50, and probably the Euro USD will have done something like this, right? In which case, you know, what I'm going to be here and what I'm going to be saying still is like, yeah, sure, the Euro USD has moved lower. Let's assume it has done that as well. Okay, and what am I going to be saying? I'm going to be saying, this was impulsive, was corrective. This was impulsive, was corrective. Boom. So I don't think that, my point of view with Stelios's point of view are diverging. I remain bullish the Euro USD. Do I believe it's going to go, to 126 from here and not from a little bit lower? In all honesty, I have absolutely no clue. Because this is still a corrective move. And one thing I've kept repeating is that you can never know in advance when a corrective move, how a corrective move is going to evolve the structure, unless you start seeing that a new impulsive move has begun once again. Then you can pinpoint the end of a corrective move quite clearly, right? Fundamentally, is CAD really this bad? Seems Polo's been dovish because of this move. A lot of us, I would say, Jason, that it's mostly a factor of a lot of uncertainty, because as you understand, Canada is is one of the main partners of the US, and with NAFTA and all the uncertainty around trade deals and everything else, I think it suffers because of that as well. Okay. Hey guys, can we get a short and intermediate term analysis on crude, please? Yeah, absolutely. Although nothing has changed since the last time we had a look at it. The situation with crude is the following. It's exactly what we were saying now. Crude is correcting lower since that high over there, just below 67. And we have no clue what the form of this corrective move is going to be. Is it over and it's going to new highs from here? Or it lacks one more leg lower towards 55? That's the question that's still open and unanswered here. What isn't a question mark in my mind is the fact that this is a corrective move regardless, right? So when I see more signs, I'm going to know from which level we're headed to new highs, but I do believe we're headed to new highs. Okay, so I have a high conviction that crude is moving higher. I'm uncertain if it's going to do it by breaking this little formation here, or by breaking lower from this formation here, going to 55, squaring off, positioning even more, and then pushing higher. Steve, if you're not a scalper, I'm not, and you build position and listen to Stelios, who is looking for a move higher in DXY, and I follow him, I say here is the place to enter shorts in Euro USD. So I don't know if you're talking like a trader or just watching. I'm got a little bit confused from the questions here. Is the place to enter shorts in Euro USD? So I don't know if you're talking. I'm always talking like a trader because I'm trading, and I actually, always have some kind of an exposure to the euro, in the sense, for example, I've been shifting around my account from being a dollar account to a euro account, and vice versa, according to what I believe is going to happen with the Euro USD. So, for example, I'm a European, so in my broker I had a euro denominated account, and when the euro was trading at 136, I made a second dollar denominated account and I transferred all my funds there. So I was passively short the Euro USD for a long period of time. Some time ago, when I saw the signs that the Euro USD has actually bottomed, I switched back all my funds to the euro denominated account. So in essence, I'm also trading the Euro USD on a longer term basis, but I don't know what you want me to tell you. Yes, I'm not a scalper, and what I'm telling you in essence is that I see no signal here that can tell me if I want to be the Euro USD in the short term, long from here or from lower, simply because this is a very choppy consolidation. Now, what is no question to me is that this is a consolidation in after a move higher, which followed the consolidation after a move higher. So I have no reason to be looking lower in the medium term, right? That's what I'm telling you. Now, if I see some strong signal that tells me that we found a bottom, so for example, let's say that we see some more dollar strength and dollar goes to 92.5 and it gets massively rejected from there, and at the same time, let's say Euro USD has found some nice support here and we see some nice big candle from there, then I might go out, as I very do often, and they say I see a very strong signal that we might have found the bottom, but there's nothing I can say here where we currently stand in the middle of a consolidation. I mean, this is a coin toss, in my opinion. If we're talking about looking ahead 1, 2, 3 days or 4, 5, 6, 7 hours. Now, to trade, even shorter term, I would have to go down to a 1 hour chart, but this is the kind of trading that I don't want to be doing, right? We have a friend saying Euro USD would be a gift if it moved lower to 120.50 to 121. I agree 100%. I agree 100%. This area, we had these highs there as well. Anywhere there close to 121, as long as the structure keeps being overlapping and choppy, which equals corrective, is going to be a gift. I agree with you 100%. 100%. Oh yeah, about Euro USD, I was pointing out that Stelios' comment was for a move to 92. Yeah, Stelios believes that we will get a hawkish response from the Fed, and it's likely. It's likely, Martin. But I don't want to jump into conclusions and assume what's going to happen with the Fed, because I'd rather take the technicals. And from a technical perspective, the Euro USD indeed has a room to move lower from here. But would also not surprise me moving, straight higher from where it is. But it definitely has room to see some more dollar strength. There's no question about it, without its technical structure breaking and becoming something bearish. You know what I mean?
And my view, as I said before, is I think the most probable scenario for me is for that to happen. Obviously, I don't know if it's going to happen, but I think given what's priced in, there's a good chance that this might happen, and DXY might go to 92-ish. So.
Well, yeah, it certainly can, and it can even go to 92.50, which has a very nice confluence of resistances, Stelio. But if we get rejected from there, that means that this market remains bearish once again, because simply it will keep respecting that. Here it is, this descending trend line, right? You can see it here. So, even a move up to, although this line is descending, so depends on where we go and meet it. I mean, how soon, it might be lower than 92.50, it might be at 92, as you mentioned. Even a little bit later, it might be like at 91.70, whatever. But the case remains that as long as we remain below that trend line, we have to keep respecting the dollar's downtrend. There's no question about it.
And the beauty, sorry to interrupt, I want to say the beauty of looking at an instrument from more than one angle is that, look, on the technical side, you can see this descending trend line. There is room for it to go there. And we can now tie that in with this scenario where the Fed is a little bit more hawkish, not a lot more hawkish, maybe a little bit more priced into what they're going to do this year. That ties in really well. So when you see the potential technical move and you match it to a potential actual, a reason for it to go there, I think that's a very strong signal in my
and keep in mind, Stelios already mentioned it, the market is pricing in that we're going to get a hike. I mean, it's pricing it with almost absolute certainty. So what does that tell us? It tells us that if they don't hike, we're going to get a huge move lower in the dollar. By the way, I believe there is no chance they're not hiking, right? So this is just a theoretical approach. So we know that if for some reason they don't hike, we're going to get a huge move lower for the dollar, which isn't going to happen, as I said. And what do we also know? That if they hike, the dollar is not going to move because they hiked. Why is the dollar going to move? Because of whatever rhetoric they give us along with the hike. So in essence, the dollar is not going to move because they will hike. The dollar is going to move according to the forward guidance they're going to give us. So if the forward guidance, as Stelios said, pictures that 2 hikes is, the minimum scenario, 2 more hikes is the minimum scenario for this year, the base case scenario, and alternative scenarios that exist are all for more hikes than that, then the market can move to the upside based on that, because it will start pricing in, let's say, 3.5 hikes for this year, okay, immediately. So it's going to price in, another half a hike at least. So on the other hand, if the rhetoric is quite cautious, the market has no reason of, repricing what's going to happen this year, and that might permit the slow trend lower to resume. So it won't be really a surprise if we see a hike, which we will, and dollar grinding lower from there if the rhetoric is not a hawkish one. Right, Stelio?
Absolutely, 100%.
Okay, so do we have any more questions, or we call it a week? Yeah, hikes in interest rates, Kurt. Yes.
I think that's a good point to wrap it up. What do you think?
What were they pricing in when the DXY was at 100 plus? Since then, the Fed has become even more hawkish, and the DXY is 10% lower, Bill says. Bill is asking, Stelio, what were they pricing in when the DXY was at 100 plus? Yeah. Since then, the Fed has become even more hawkish, and the DXY is 10% lower.
When was the DXY at 100 plus? Remind me. Hold on, let me look at the chart. This was, was in end of, this is when they started hiking in December 16, right? So it was a point where the whole outlook changed and they started hiking, and it looked like they're going to keep going. So DXY at 100 started pricing in more, actually starting pricing in hikes from pricing nothing. And also that was a time when the euro was quite a bit weaker. Remember, it was before the French elections. It was before a lot of things. So the euro was a bit weaker. And remember, it's half of what the DXY is made out of, euro dollar. So I think a bit of both. That was a part where we went from pricing very little to pricing hikes in the US. How much, I don't remember. I have to go back and see. So I think it was a combination of dollar strength, slowly strengthening, and the euro being quite a bit weaker than it was today.
Bill, this is not really a surprise. We've seen bottoms in the dollar when quantitative easing was, another round of quantitative easing was beginning. We've seen highs in the dollar when quantitative easing was ending, meaning that you very often see the market do the exact opposite of what common sense of somebody that's not really experienced would say. Why does that happen so often? Because the market. Huh?
Oh, I was just saying goodbye to Estelle. Have a great weekend, buddy.
Oh, is he leaving?
Yeah.
Okay. Yeah, he has to pick up the girls. So the market is a discount mechanism that looks ahead. Many times, the vast majority of the times, it overshoots expectations, and suddenly it wakes up to a reality. Being, for example, Trump. I have to say though that Trump and his agenda definitely affected that, because Trump, since the very beginning, had an agenda that undoubtedly, if you remember, I've spoken about that many times, undoubtedly Trump's agenda is going to hurt the dollar in the end, no matter what. Because even if he manages to stimulate the economy, which I don't think you should try to stimulate an economy in such a mature part of the business cycle in the way he's doing, you know, more or less in a Keynesian way, it definitely, you can see what's happening with trade deficits and most importantly with the deficits. And that is long-term very, very, very bearish the dollar. The fact that Trump's policies, you know, are what they are, even if they manage to keep the economy from going into a recession for a little bit longer, let's say to 2020 or whatever, are definitely bearish the dollar. And I think that the market is going to find it very hard rallying strongly from here, given the outlook of the US economy. Because bottom line, this is a conversation we had another day. You know, either it's going to be inflation or a recession or whatever. I don't see many, you know, many potential ways that the dollar could end up rallying to new highs. I really don't. I really don't. I think that the dollar might have started another bear market. The dollar is anyhow, if you see a very, very long-term chart, is, you know, is in a, you know, long-term bearish move, right? And I don't think that's about to change. Probably quite the opposite. I can see several scenarios in which the dollar's weakness is going to accelerate, but I don't see many scenarios in which we might have like a bull trend for the dollar. Anyhow, thank you all for being with us this week as well. And Dale, I'll let you handle the outro.
Oh, okay, outro, yeah. Okay, everyone,
Yeah.
thank you so much. I hope one of you guys won the contest. When's that going to be announced? The winner of our contest.
I remind you that we wanted to make the contest be more or less equally fair for people that decided to vote on Monday, Tuesday, Wednesday. That's why the prediction we asked them to make was for the closing prices of next Fridays.
Oh, I see. Okay.
So we will know the winner Friday night, next Friday, in 7 days from now. Okay. And we're going to announce them on Monday's webinar, not this Monday's webinar, the next one, okay?
Thank you, Steve. So unless you have the time, you got to wait.
I think it's Monday the 26th. Yeah. So winners will be announced on Monday the 26th on the Face webinar.
Okay. Thank you, Steve. Have a great weekend, everybody. Have a great weekend. And remember, if you want to become an ace, spend your time in Face. If you want to learn some trading tricks, you better subscribe to ForexAnalytix. So have a good weekend, everybody, and I'll see you Monday after you've done your homework. Looking to trade the Fed, but we'll use less leverage or our accounts will be dead. Should be some equinox trade. I'm looking forward to the fades. So just don't count your pips, count your blessings. Thank you for your support, everyone. The thousands that have joined our live webinar, the hundreds that have subscribed to ForexAnalytix, and in my extremely accurate and humble opinion, this is the best free or paid FX webinar on the net. So have a great weekend, everybody. See you Monday. Recharge your battery, do your work. I love Fed weeks. I'll see you then. Adios. You're very welcome. You're very welcome.